Hello and welcome to another update video about XLM. XLM did reverse in our trend reversal area here, highlighted in orange. Yeah, we are watching for the potential and the possibility that here a C wave to the upside could emerge. And the target for that would be around about 20 cents. We can calculate that. Remember, if we zoom out a little bit, we are dealing here with most likely with a wave 2 correction to the upside. We had a B wave low back in June. And since then, we've been watching for a potential 5-wave move to the upside in a C wave of a wave 2 correction. So we'd likely only in a corrective move to the upside. Nevertheless, we of course follow a short-term bullish stance and perspective at the moment, as long as the 13.5 cent level is holding. Okay, below that level, things are going to get a little bit difficult. In that case, then we will likely deal again with the support area here at 11.1 cent. Below that level, however, I think the rally is over. Okay, very important. So at the moment, and I don't have much confidence in this one, because the overall chart context is uncertain or rather bearish. But it always has a chance, which is why we follow through to the upside, because the short-term trend is up. So it wouldn't make any sense not to go with the short-term trend very, very clearly. Elliott wave allows us to understand that the trend is up and the relevant support areas did hold recently. Resistance reached and worked as well. So what are we dealing with here? So obviously it reacted to our support area, yeah. The idea was that we peaked here possibly in a third wave. We came down in a fourth wave, and that we're now running in a fifth wave of wave C. This fifth wave would most likely be structured in an ABC structure, and it looks like that the A wave was done, the B wave was done, and we are now rallying in a C wave. To do the C wave, we need 5 waves again. I don't have a very good picture or image of the micro count here. I don't have 5 waves yet. I don't think so, at least not reliable ones. But that doesn't matter so much, because the support area did hold. Now, if we deal here with an ABC structure in wave 5, then the target for the C wave would be the 1-to-1 ratio, at least the first one. That's around 20.2 cents. So we'll certainly pay attention to that level on the way higher. And there is resistance around 17.5 to 18 cents, because this is structural resistance as well as larger Fibonacci resistance here. We got rejected a few times. Now, is this the only possibility? No. As you can see, price is doing lower highs and higher lows. So what I cannot rule out is that price is forming some kind of an Elliott wave triangle. Yeah, like this. If it's forming an Elliott wave triangle, then, I mean, let's say in both scenarios, in the scenario in which you're already in the C wave to the upside and in which wave 5 has already started, price really should not break below the 26th of July low again. And that's at around 14 cents. So as long as we're holding 14 cents, the focus can be on higher. And round about the 18 cent level is a bit of a breakout point here. So in that, if this really is the wave count as it's shown here, we should hold that Wednesday low and could go higher into the direction of 20 cents. A break below the 14 cent level though would indicate that this structure is likely breaking down. Okay, and we would have another chance to hold support in the previous support area, but below 11.1 cents, it's likely something more bearish. There is another wave count we can deal with. We could simply say that this wave 4 is unfolding as an Elliott wave triangle. A wave 4 oftentimes unfolds as a triangle. And however, in the short term, it wouldn't make any difference, really. Yeah. So an ABCDE triangle, a so-called ABCDE Elliott wave triangle, consists of an A wave to the downside in this case, a B wave up, a C wave down, a D wave up, and we would need one more higher low in an E wave, and then it could go. As you can see, there is really no difference to the other wave count I showed you, in which we have this ABC structure. I think maybe the triangle is more reliable. I'm not sure. We have to see. Again, it doesn't make any difference in the short term, but also in the Elliott wave triangle count, price should really not break below the 14 cent level again, which doesn't mean it couldn't do it. It can, but if it does, it means that the triangle is likely going to be, well, either invalidated, which it would be below this swing low here, below the 12.5 cent level, or it's just morphing into a different wave count. But I feel this wave count here is a bit more robust, the ABC structure to the upside. And I'm watching now if the 14-cent level is holding. And if it does, price could go to 20 cents. But be aware, I mean, what are we dealing with here? We are dealing with most likely with the C wave in a wave 5. So basically the last wave in the last wave of a rally, most likely, before we get a deeper setback. Yeah, either to new lows or for a higher low in a wave 4. So trading a fifth wave, again, is not the best risk to reward ratio. As you know, yeah, typically in Elliott wave, we're looking for third wave rallies. This is not one. So if you trade this, don't be surprised if the support level breaks or if reward to risk is pretty poor. That's my update about XLM. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.